Welcome. Hey, how are you doing? So, we were having some technical difficulties this morning. So, unfortunately, I will have to do a pre-recording of the webinar and then release it out to everyone. I really wanted this to be engaging, but sometimes we have to deal with some obstacles and challenges in our life. However, the information that you will have access to will absolutely 100% help you prepare and secure your goal in enhancing your financial future. My name is Simon Betroni. I am the co-founder of W3MCT, and our goal is to help those transition from Web 2 into Web 3. We also provide security for the blockchain in running ASIC. These are application-specific integrated circuit hardware, specific hardware to mine the blockchain. We mine Bitcoin and Litecoin, Handshake, Helium, Chia, and a few other blockchains. And providing this security, we are rewarded in doing so. So throughout this journey, throughout my time in Web3 and in blockchain technology, I've found out there is a different strategy when it comes to marketing. There's a lot of companies and a lot of communities and projects that have an amazing use case, but unfortunately, they're not getting the recognition that they technically kind of deserve, right? But the market game is different, okay? The capitalistic strategy in traditional finance and the traditional economy and the way we were doing things offline is actually quite different in using that engagement process, marketing process, collaboration and training workshops, right? The way to create sticky members, right? Sticky community members, people that aren't momentum chasers, but people that will be here and not just be here, that will create stories and memories and then share that with others. So that's really the ultimate goal, is what we want to establish in Web3. And in Web3, that strategy is quite different from the capitalistic strategy. And one of the hardest things I've seen in this space is co-ownership, right? The thing about creating a community that's going to be engaging, that's going to be here during a bear market, and that's going to be here when times get rough, but not just be here, but also engage with other peers in the community, right? And share this with somebody new. How do you get someone to do those things? How do you motivate your community to want to share what it is that you're building during a bear market? You see, during a bull market, everyone is on hype juice, everyone loves it, everything is great. You'll have capital flowing from all different directions, right? But during the bear market, you're not going to see the same type of support. You're not going to see the same type of attention. So the thing is, we have to find unique ways to create this engagement. And so this webinar today is going to show you how I found a strategy that helped me in improving my financial future. And with this strategy, I want to share with you all how you can do the same thing for yourself. It's really simple and it's not that difficult. And I promise you, it's something you've probably already heard. Okay. So it's unfortunate that the technical difficulties and some of the things going on right now with Zoom is not allowing me to do this live right now. However, I still want to get this information out to you. I promise you, we will do another session together where we can have more interaction and we can go through the Q&A. Maybe we'll even do a YouTube session for you, but right now we're just going to record what we're doing and let's get to it. So the process is going to be this, right? I'm going to go through a small presentation, PowerPoint, just kind of giving you a foundational beginning, and then I will show you guys exactly how to use Lofty. Lofty is a web-based application that goes over co-ownership in real estate. And with this application, it creates the opportunity for anybody at on any level to start building out their real estate portfolio. And it's important that we start having these conversations as a community, right? Because these are some of the things that weren't taught to us in our early educational days being at school. So now that we're older and we're finding out some of this new information, right? And we have this huge financial literacy movement that's been going on. And we want to do our part. I want to do my part in sharing this information to my peers. Okay. Now, remember, anything discussed during this webinar is for edutainment purposes only. Edutainment means educational and entertainment. So we're going to have a little bit of fun and we're going to have a little bit of education. But this does not mean it stops here. This is just the beginning of your journey. If you want to continue going down this path, I highly recommend you reach out to professionals. If you're looking to purchase, buy, or sell any type of real estate, reach out to an agent. As of right now, I'm currently not an agent. I am going through the pre-licensing course. So in the future, I will have to let you guys know that I am a real estate agent and so forth. But as of right now, I am not. However, with this recording going out, in the future, I may be an agent if you're watching this in the future, right? If you're watching this at a later date. So that being said, let's get to the content because I know you guys have a lot to do and I want to make sure you can get started today on your journey. So what's up, everybody? Thank you for joining us. Thank you for being here. We're going to be discussing real estate co-ownership, and it's brought to you by our partnership with Lofty.ai and W3MCT. My name is Peter Simon Petroni. I'm thrilled to guide you on this enhancement journey towards securing your future with investment. Now, the outline that we're going to go over is going to look a little bit like this. We have our introduction, which is what we just went through. We're going to get into Web3 real estate on the blockchain, real estate co-ownership, traditional process barriers, businesses implementing blockchain, the pros and cons of ownership versus co-ownership, the global playing field and what that means, the simple steps with Lofty.ai, a case study or a story here and there, the power of 50, and then we're going to close it off with some Q&A sessions 1 and 2. Now, the Q&A sessions 1 and 2 will be on YouTube, okay? So what we're going to do is we're going to allow everyone the opportunity to watch the recording and to come, get up to speed with everybody else. And then in the Recession Proof channel and on my own social media channels, I'm going to select a date for us to meet on YouTube, and then we'll do our Q&A sessions that way. We'll do 2 YouTube live sessions. So please write down any of your questions to remember them at a later date. And for everyone that's interested, for joining us, right, and for signing up, you all will have early access to the ebooks, right? We have the ebook Introduction to ChatGPT, a guide to conversational AI. And then we also have Web3 Learning. We're going to start your new business today. In a few small steps, we're going to help you prepare yourself now to secure your financial future. We understand your concern with going after new goals, and we want to make this as simple as we possibly can. So our goal is to start with small steps and then scale at your own pace. So let's begin this journey with a new revenue income stream. And I know you guys are going to enjoy the strategy here in front of you. For all of my overachievers and go-getters and those that are ready to take massive action today, I highly recommend that you scan these QR codes. The first QR code right here will bring you to our Substack. Our Substack is a free newsletter, and this newsletter will share with you all of the things that I'm reading and I'm looking at, and some key terminologies and some key definitions that you guys should be aware of being in this space. The Navigate the Chain Substack is available, like I said, 100% free. If you do want to pledge to support the newsletter, you have that option. But if you don't want to support, that's perfectly fine. It's okay. Just click on no pledge and then type your email address and then just continue on to the Substack profile page. The next here is a QR code to W3MCT and the T&F Insight Report. These insight reports come out on a monthly submission for our members, and quarterly for free on the website, right? So if you go to w3mct.com or you scan the QR code right here, you can scroll down to the bottom of the page, and that will be a nice, simple, and easy to digest presentation insight report. Now, that is not the full insight report. It is a high level insight report of some key things that you should be aware of in this space. Remember, this is not investment advice. This is just knowledgeable information of what's going on in the space that you guys should be aware of. And then the last QR code is something that you're going to enjoy and is going to allow you to start building out that portfolio. So that is an affiliate QR code link to our page on lofty.ai. Remember, this is an affiliate partnership with lofty.ai. I am an affiliate partner with lofty.ai. And if you would like to use my link, right, to sign up to lofty.ai, I would 100% appreciate it. However, it is not mandatory for you to use my link. You can go and go to the your own link and not use mine at all. But I do recommend, hey, if you do want to work with me in the future with some mentorship or some guidance, right, the individuals that use the affiliate link will have priority. Okay, so just want to get that out there. Now, next here, we're going to get into what is Web3 wallets, right? What are the type of Web3 wallets and why is this important to you? Web3 wallets is how we interact and navigate the blockchain. The digital asset world will require us to have security. So let's just keep this simple, right? Hardware wallets are considered one of the safest ways to store your digital assets. They are offline and they're not connected to the internet. So it makes it resistant to hacking attempts and other online threats, such as malware and phishing attacks. For everyone that wants to interact with the blockchain in the future, today, yesterday, any day, you must have a hardware wallet. Now, it's not something where you have one hardware wallet and you're good to go. In actuality, you're going to need 3 wallets, right? And this is how all the professionals and the OGs in the space are doing it. I highly recommend that you guys do it this way too. So we'll have a mobile wallet, we'll have a web-based wallet, you'll have an exchange wallet, and then you'll have your hardware wallet. The wallets that you're probably going to interact with on a day-to-day, daily basis is most likely going to be your exchange wallet, mobile wallet, right? For other, maybe on a weekly basis, right? For those of us that want to do some yield farming, right? And want to use a desktop, right? You're gonna have your web-based wallets, right? Those are examples of like MetaMask. SafePal has a web-based wallet, Phantom for Solana, and those just to name a few. And then the exchange wallets are wallets for like Coinbase, a Binance, right? All of those exchanges, right? They have a wallet. Now, there's a difference between a web-based wallet and an exchange wallet, right? So, a web-based wallet is a crypto wallet that allows you to store, send, and receive these digital assets, also known as cryptocurrencies, through the browser interface. So it's different from hardware wallets. And the way it's different from hardware wallets is that they're easily accessible, but less secure due to online vulnerabilities. Okay. I apologize, guys. Let me make sure my do not disturb is on because, yeah, or all right. Thank you. Sorry, guys. And then so we have the different web-based wallets, right? And they're less secure due to online vulnerabilities. These are good and they're ideal for small amounts and frequent transaction. These wallets often come with user-friendly features and integrations. Exchange wallet, right? The exchange wallet are provided by the cryptocurrency, or also known as digital asset exchanges. Okay, they're convenient for trading and storing small amounts, right? They are not as secure as other wallets because the exchange has control over the private key. Now, the private key and their public key are two things you guys will learn about in the future. I'm not going to get into it right now because there is a lot when it comes to it, but please be aware that you never share your private key with anyone, okay? You do not store your private key online. You do not store your seed phrase online at all. All right, I highly recommend that you write down your seed phrase on a piece of paper and you put it in a safe, or in a safe place, or literally in a safe, okay? And not online, right? Not online. That is the best way to be secured. Now, next, we're going to go over a hardware wallet and what is Web3. A hardware wallet, such as SafePal, is a way to securely store these digital assets offline. All right, it's immune to online hacks and allows for safe physical control over your digital assets. Okay, a hardware wallet from SafePal looks something like this. Okay, and you use this to scan your QR codes. Okay, so when you want to access your funds, this is used to store and secure your private key. So anytime you transact on the blockchain, for example, if you want to send me some Litecoin, or I'm gonna send you some Litecoin, and we're gonna send it out of the wallet, we're going to need to use your wallet to scan the QR code because you need to sign it, right? You need to verify that you are in agreement, right? That you approve that the transaction happens, right? And this is important because we don't want anyone else trying to sign on your behalf, right? Okay, so that's why it's important to have a hardware wallet. And if you guys want more assistance and guidance when it comes to hardware wallets, I can help you with that as well. What is Web3? So Web3 is a lot of things, right? Web3 is this massive enhancement to the internet. It's a new version of the internet. It's a new way of interacting with one another, interacting with your peers, interacting with the community members, interacting with your capital, interacting with digital assets, interacting with your business online and having a new online presence, right? You'll hear words like decentralization, okay? So where instead of these big companies holding all of the data, right, and making the rules, we're like, hey, timeout. How about we start flipping this over, right? How about we start allowing the users to gain more control and ownership, right? How about we allow decentralization to occur, okay, where the people actually have voting power. The people all of us, right? The ones that seem to be forgotten in the capitalistic world, right? We're trying to figure out, hey, how do we start bringing back the engagement with the people and allowing the people to feel ownership again? So this uses blockchain technology, and it makes things more secured and more decentralized, allowing everyone and anybody to participate on in the blockchain on a global scale. So in real estate on a blockchain, this is a little bit different because real estate has is the by far the number one and best asset class for investments. It's the greatest way to really start building wealth over time, and it allows you to really start to understand how the economy works, how supply and demand works, how ownership and co-ownership works, right? How tokenization of real estate and real property, right? All of these things are super important. And the blockchain is starting to enhance the way we do real estate. The real estate marketplace isn't that liquid, okay? And the real estate marketplace has been secluded to accredited investors for a very long time. Now, in the recent years or so, there has been changes, and there has been people fighting for more opportunities for the middle class, right? For the lower middle class, for the everyday individual, the hardworking middle class that seems to always get the short end of the stick and always seems to be forgotten when it comes to leveling up in life, right? So the blockchain will allow everyone and anyone to participate in enhancement opportunities. So in real estate, blockchain technology looks like this. It offers a secure and transparent way to record these transactions. So it will simplify the way property transfers, the way registries are more reliable. We'll get into facilitating real estate investments, right? Like co-ownership, right? We'll understand what a digital token is and how you can use this to your advantage. And this can make the process faster, more secure, and reduce the need for intermediator, oh my God, middlemen, right? Middlemen and women like agents and lawyers. Now, that doesn't mean they're going to go away. Okay. It just means that as an agent, right, as a lawyer, you now have more tools at your disposal. Okay. So you can create more options and more choices for your buyer, for your seller, for your client. So keep that in mind. Don't look at new technology as a way to replace you. Okay. New technology is always will always be a tool, and if you choose to use that tool to your advantage, it really will help you to provide more value to your customers, to your client. Okay, it will help you in providing more choices for your client. Okay, because maybe the traditional way may not be the best way or the best solution for your client at this time. And a lot of times we say, oh, that's it. There's nothing else we can do. Right. But now we have other options available where people can really start looking at co-ownership and, selling their equity. Man, there's just so much opportunity, but that's for the ownership side of things. Like for people that have their property and want to tokenize it and put it on the blockchain, you can do that as well. But we're not going to get into that. We're going to get into the individual that's looking to level up and build up that portfolio. And you're going to build up this portfolio through something called co-ownership. So what is co-ownership? Okay. So co-ownership is a unique way to improve the way we interact with one another. Co-ownership allows for more people to be involved in the process of real estate. All right. So in co-ownership is the act of owning property with multiple stakeholders. Okay, so each holding will have a percentage of equity. And this strategy makes real estate investment accessible and diversified and less risky. But how can we do this more efficiently, effectively, and securely? So that's where Lofty.ai comes in. And we're going to go over that in more detail in just a few minutes. So stick with me as we continue on the presentation. So, ownership. What are the pros and cons between ownership and co-ownership, right? So here are the pros, right? With ownership, we have a few things that we want to go over, and that is full control. When you have full control, you feel a certain way when you have full control, okay? As a sole owner, you make all the decisions, your asset, your rules. This can be particularly valuable in high stake environments, especially in blockchain technologies where swift unilateral decisions can be necessary. We also have profit retention. So this means that the profits generated from the asset will go directly into your pocket. Wha-bam, right into your pocket. Now, this is enticing for the seasoned investors, those that have the knack for maximizing ROI, return on investments. And then the next pro is the streamlined of decision making, okay? Because when there's only one cook in the kitchen, right, those decisions can be made more quickly, and it avoids the bureaucracy that can slow things down, especially when it comes to making decisions on what do you want to do with the property. And then we have a singular vision. So with full ownership, you have a single vision and it's just you. And the asset can be guided in a very particular direction without compromise and is ideal for a unique or visionary project. But with every good thing, there's a bad thing, right? For what goes up must come down. And with all the pros, there's a few cons. And some of the cons is that, well, with full control, you have full liability. So any losses or debts or legal issues, well, that's going to be all on your shoulder. All right. So you better be able to handle that burden. You also have the capital intensity. The financial burden of acquisition and maintenance is all up to you, right? So you need to calculate all of the additional funds that may come about when it comes to maintenance and managing your real estate property. And then the last thing about it is, well, hey, I know you are the best, right? I know you know it, and I know you got a great experience and career and everything like that. However, all right, that doesn't mean you have to stop learning. And so, limited expertise, okay? You're restricted to just your own skills, your own knowledge. And unless you hire external expertise, which is another cost, right? You're really going to have to deal with that yourself. All right. So, we have to take these things in consideration. So, for anybody that's just starting out into this world, right, that's looking to build up their real estate portfolio, you're very hesitant to get started because of that, right? There's a lot that relies on your ability to come to figure out the answer, right? And not just figure out the answer, to know the solution, because if you don't know the solution, that can cost you a lot of money at the same time. And one bad move in real estate in the beginning could really set you back years, okay? Some people, decades, and we definitely don't want that happening to you. Ownership and co-ownership represents these two divergent models in acquisition and management of assets. And because it's real estate, business ventures, or even digital assets in the Web3 space. We need to understand the implications of each one, and it's crucial for both short-term profitability and long-term sustainability, right? So we have to keep all of that in mind. So with that being said, let's go over the pros and cons when it comes to co-ownership. And maybe this will help you figure out a new way of looking at things. And some of the pros when it comes to co-ownership is, well, risk mitigation. You see, the liabilities and the risks are shared amongst all of the owners, right? It's not only up to you. You have a safety net, and that's amazing. You get to rely on a community of individuals that's here focus on the same direction and same vision, or not the same, but quite similar as yourself. And if you can share this vision with someone else, man, that makes it so much better. So risk mitigation is a great one to be aware of. Another thing here is capital pooling, right? A lot of times people don't want to enter the real estate game because of money, because of capital. And with capital pooling, we have more owners. So what does that mean? Well, more owners means more initial capital, therefore making bigger investments possible. So you get to be part of that multi-million dollar deal, right? As a co-owner. But before, you probably were like, man, I want to own hotels. I want to own, apartment buildings. I want to do all these things all these mentors are talking about, but I don't have the capital, right? And I know that I need to work to save up the capital, but that's going to take 10, 20, 30 years. And that's great and all, but I mean, if that's what it takes, right? That's what it takes. And people didn't have a choice before. But now, guess what? We do have a choice and we do have other options. And there are strategies available for you to kind of just shorten that learning curve. It's not gonna change it completely because it's still necessary for you to understand how to own property on your own. But for you to build up your level and become that player that can do that in the future, right? There's two ways you can think about this. You can just sit there idly on the sidelines and not get involved and just slowly save your capital until one day you're ready to make a move. But the thing about it is, you've been on the sideline for so long, you don't really understand real estate. You just saved capital, and now you have to understand real estate. So then you try to do that, and that sets you back another few years because now you're trying to understand the game, and before you know it, the deal is gone. All right. So what the goal is, we want to start having you guys participate early in the journey, participate early in the process so you can be an amazing player when you're ready to go off on your own for full ownership. Okay. So we have a diverse set of skills. A co-ownership model brings diverse skills and perspectives to the table, right? So we have a huge navigating complex landscapes like crypto markets or real estate investments. And all these different perspectives will at least help you to see how other people can see. And then we have relationship building, one of the most important things in business, right? Networking, especially in real estate. And if you're someone that you are a real estate agent, what better way for you to communicate and collaborate with your local community through co-ownership, right? So you can start preparing these deals for the individuals that may not be ready to buy or may not be ready to sell, right? But you still want to provide some kind of value to those individuals, right? So that's where Lofty AI can come in and be that additional support and additional value offer that you can do for your clients. So successful co-ownership can lead to a more robust professional network, and it opens doors to future collaborations. Now, for every pro, there's a con, and we have to go with what goes up must come down, right? So we need to be aware of some of the negative things that comes with co-ownership. Now, well, it does make decision making a bit more complicated because there's more heads and there's more opinions, right? That means it's going to slow down the critical decision making. However, it may be a significant disadvantage to a fast-paced industry, but it may be exactly what's necessary for a property asset that is trying to add value and appreciate, so it appreciates over time. And that discussion will become, well, hey, what type of value add can we do to this property? Let's go ahead and reach out to all of the owners, and we're gonna have some competing thoughts, and that's fine. So we just put it to a vote, and then we put it to a democracy, we put it to a vote, and then when the votes come out, the results come out, we follow through on the results. But at the same time, it allows everyone to share their perspective and to be heard, and that's really important. Profit sharing. All gains must be distributed amongst the co-owners, diluting individual profits. Here is one of the reasons why many Web 2 projects coming into Web 3 are having difficulty, right? Having difficulty with engaging, having difficulty with growing their community, having difficulty with keeping their members, right? Because they don't want to share the bag, okay? They don't want to share the profits. And I understand, right? More people, less money per individual. But the thing about it is, it allows you to do more. So if you're only going to be focused on one deal and one deal for your whole life, then fine, whatever. But if you're looking to do this on a continuous basis, right? Just think about it like, hey, it's just, what we like to say in the trading is small gains add up, right? So it's just another asset. It's just another a new additional revenue stream, right? And I want my community to win. I want you to win. I want you to enjoy rental income, right? I want you to have an asset that pays you in rental income, that pays you in passive income too. Because if you're winning, you're gonna start being helping your local community, your local friends, right? Being a better individual. And if you're winning, you're not stressed. And if you're not stressed, right, you can focus on some different things in your life, maybe even do a passion project that you've been putting off for years, right? And then you just become a better member for community. So allowing each other to win is so valuable to the macro of this of all of this. So the it it defeats the capitalistic strategy, because the capitalistic strategy says, "Ooh, talk ish about your competitor, figure out their weak points so you can manipulate it and take advantage of it and do this and then do that and blah 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 blah." Right? Like, and I was never for that. I was never for that, and I still don't agree with it. The pool is big enough for everyone. There's a lot of market share to go around. So to think that we need to take from one another so we can have, is that just that's not true, and that's not accurate. So the process of co-ownership will help with that mindset shift as well. And so these things, when it comes to potential for conflict or legal complexities, right, it's going to require a more complex framework, right, increasing the initial setup time and cost if there are legalities that need to come from it. But there's ups and downs with it. And so we take this information and then we say to ourselves, what is the best thing for me? And so next, and moving on, we see how this gets incorporated into blockchain and how blockchain can be incorporated by any business, no matter what you're doing. But blockchain does an enhancement to all of this, such as e-commerce, peer-to-peer lending, global payments, supply chain, proof of identity, ownership, right? Crowdfunding, debt, equity, microfinance, intellectual property, and digital rights. This is what blockchain does, and this is what blockchain as a service can provide all of these new businesses, right? So we have these transactions, we have development, and we have education and community collaborators. And through all of this collectively, we've created a new ecosystem called the blockchain. So with Lofty.ai and now getting into the strategy of how you can use this, we calculated something and created this thing called the power of 50, right? The power of $50, the power of consistent investments, right? A steady, reliable investment habit will beat the occasional big splurges in the long run. The importance of appreciation. So understanding what appreciation is, and in the calculations that we have for our example, we're working with a very modest appreciation rate of only 3% per year. And then the calculations and future projections, all right, will help your clients improve their IT infrastructure and ease them in with the best service. Okay. So when you have these results, okay, it will ease your clients because they'll start to see, oh, whoa, wait, there's something here, right? There's something of value. And wait, hold on, time out. I can do this too. This isn't just for the rich. This isn't just for the wealthy. This isn't just for XYZ or that person over there, right? This is for you. This is for me, and this is for all of us. And that's where these calculations and future projections will come into play and why it's important that we share this. So secure your key. This is just very important for you guys to be aware of again, right? Private key. Never share your private key with anyone. Never share your private key with anyone. Never share your private key with anyone. Never put your private key on your Google Drive, on your iCloud, on the computer desktop, okay? You store your private key, write it down on a flashcard, notepad, or something like that. We use effective marketing tactics in Web3. It's different from Web2, and you should be aware of that. We also need to have a sound financial management. Be aware of and be intentional with what you want to do with your capital. And then from that, again, create an effective marketing tactic from there. Okay, this concludes the presentation portion of the webinar. I really hope you guys enjoyed it. Please write down your questions and we'll do it. We'll do answers during the Q&A sessions 1 and 2 on YouTube Live. Now, let's go to the second portion of the video, which is understanding Lofty and the Lofty marketplace. So right now, here is an example, not an example, here is the marketplace. I was going to show you guys, this is my marketplace, right? And some of the assets that I own. I currently own 26 properties on the blockchain. And here's the rent balance that I have. Here's the total rent earned, and my account value and the property value and the estimated historical return. Where else are you making 10.10%? Okay. And not even just 10.10%, I also have a property appreciation by 3.58%. And I'm going to show you guys exactly how I am doing this. So each property has its own amount of tokens. Okay. So in Lofty.ai, you have a property that's available, and each property is divided by 50. And in the $50 increments, we will result in a certain amount of tokens. So, for example, this property has 2,432 tokens. I currently own five of those tokens, right? I own five of those tokens, and I own 0.21% of this property. Okay. So far, the principal cost balance of this property is $261.25, or actually, it's gone up. All right. And it deviates from the property's overall value change due to the purchases. Okay. So right now, when I purchased this at $50 each, right? 5 times 5 is 25. So this was 25. I mean, this was $250, right? This has appreciated by 5.44%, right? The property here, the principal value of our tokens is also updated on a monthly basis. And on the rate of change of the from the House Canary report, the automated valuation model, it's the there's just so much more that goes to this, okay? And the math behind it, but this has gone up 15%, okay? Currently, I get paid out $3.05 in the current rent balance. I've made a total of $20.21. So let's this, I know like the numbers may be small to some of you guys, right? But I want to make you guys aware of all of this real quick. I've made $20 off of 250 bucks. Okay. I made $20 off of $250 by doing nothing, by simply being a owner of this property. And not only did this property increase, appreciate in value over time, the token value also appreciated because of it. All right. So when we have another property here, right? I have three tokens here. I own 0.11%. I've made a total of $6.74 off of this property. The property appreciated by almost 11%, and the current value is appreciated by 2.63%. Okay. We have another property. Man, I really wish I bought more tokens on this one. Look at this, right? We're talking about an increase by 60%. All right, property appreciation by 34%. I only own two tokens of 0.05, but hey, I still received that. I haven't received rental income yet because I believe this is still open to the marketplace. Now, this one here, you can see, right? This is just a small $100 investment. I bought two tokens, right? I only own 0.09%. My rental yield is at 2.18%. You can see the current value increased by 14.6%. The property appreciation over time has been 21%. I've made $8.31 in total rent from this. I made $8.31 in total rent from this, and the current rent balance is $1.14. And really, guys, this is just the same thing. But hey, like when things go up, some things go down. And this property here in Cincinnati, well, I went down negative 1.8%, but I've still made $18.61 in total rent, and the property is appreciation, right? So it's actually making up for that loss there. But you can still see some of them, a lot of it is really increasing in value. This one here, all right, so this property has gone down 5.65%. Property hasn't appreciated that much, right? So we're still in the negative here a little bit, but I'm still earning rent from this property. Okay, so even though the current value has gone down a little bit, all right, I'm still earning rent on this property. And if I wanted to sell these tokens, I could and change this for a new property. And look, and this is just, the rest of it. Out of all of these, some of them are red, some of them are green. okay? And we have, that's what a portfolio is, okay? Some of them are doing amazing. So now let's just take a quick look at the marketplace. All right. So the marketplace is this is where all the fun happens. This is where all the action begins. Okay. So Lofty Marketplace allows you to invest in fractions of rental properties listed by third-party sellers. And all of these properties are available. So this property is a property I made a YouTube video on, and I made a video saying that I own a $1.4 million property, which is two, right? Which is two, which is true, right? So the financials of this, right? The total investment value is 1.4 million. Okay, this is a multi-unit property, and you can see some of the calculations that can happen from this, right? And the projected annual return, the projected rental yield, and so forth. Okay, so the market opportunity with Lofty AI is allowing everyone to be able to participate in this. Okay, so when it comes to the power of 50, we're gonna fantasize a little bit. Okay, the power of 50 is, imagine if you could invest $50 a week into a co-owned property. I know it sounds small, and you're like, I don't even know if this is worth it. But with a 10% annual return in 10 years, you're talking about almost $40,000. Okay. But some of us don't want to wait 10 years, and that's, hey, I get it. That's fine. So let's do a few examples of what you can do in a shorter time period. Okay, so while we go to the marketplace, let me just go to the home page. If anybody is interested in being part of the community, and you're interested in joining the crew here, right? So all you need to do is go to w3mct.com, and then you can go ahead and click on learn more right here. Learn more will bring you to the next page that will allow you to sign up here. So you can go scroll down and then click learn and earn. All right. When you click learn and earn, this brings you to the sign up page, my affiliate link sign up page for lofty.ai, and it looks something like this. And then you guys will earn $20 worth of real estate for using my link. And here are some of the other people involved with lofty.ai and some testimonies and stuff like that, right? Investing in real estate has never been easier. You get to browse the properties, select them, earn rent daily, and with no lockup periods. Okay, I've been doing this for years now, and I absolutely love it. So we made it a lot easier for you as well. Okay, so let me go back to the other page here. If you are interested, just scan this QR code right here. Okay, scan this QR code right here, and that will bring you to the affiliate link page. Okay, so it will bring you to a page that will allow you to sign up just like this, right? So click on this affiliate link here. So while we have this up, let's just go over a few and fantasize. So imagine we have $50 invested every week with the understanding that we're only going to appreciate by 3% per year. What does that look like? So why $50? Well, because $50 is manageable for most people. It's basically sacrificing a dinner at a restaurant each week, or a fleet meal, that you're looking into buying your future. Okay, so you're sacrificing one meal to buy into your future. And we're working with this modest appreciation rate of 3%. Okay, this is a conservative number, especially for certain types of investments. But even with this modest number, you're going to see something extraordinary. You're going to see something happen. And with $50 a week for 3 years, all right, you'll have invested $7,800. And with that $7,800, if we add a 3% annual appreciation, that becomes $8,050. Remember, this is $8,050 that you just saved up, have it grown for you, okay, while owning real estate off of $50 per week, okay? Now, if we wait 5 years and we do that same initial investment of $50 per week, that's bringing us to about 13,000 with a 3% annual appreciation. That grows to 14,200. All right. Now the 10-year play. Most people don't like the 10-year play, but let's just do it for those 10 years, $50 per week equals about 26,000 in raw contributions. Okay. Now let's add 3% annual appreciation. Now that becomes 31,300. You just made 5,300. Okay. Off of a 3% potential appreciation. And this is not even the biggest appreciation, right? This is very, very modest, very, very conservative. I mean, the stock market, roughly appreciates about 8%, okay, each year. As you can see, some of the properties that I've shown you guys, I've done way more than 3%, okay? So this is an opportunity for our community to start focusing on real estate portfolio, start building out and securing our financial future. Now, if you want help with how to use Lofty.ai and you're interested in starting this and you really, and you're like, man, Simon, I don't know if I can do this on my own, I will help you guys sign up. I will help you with setting up the wallet, setting up the purchases, and doing all these things. Just let me know. The way you got to do it is just literally just sign up to the free newsletter, navigate the chain so I know who's interested, or just use the affiliate link, okay? Because on the back end, I'll be able to see who signs up, and then I'll reach out to you. I'll send an email your way, and if you're interested, you just let me know. Well, guys, like I said, this is 100% free. This is exactly what I'm doing right now to help save some money. Not even just save some money, but to also learn about real estate, to learn about ownership in real estate, okay, to learn about what goes into property ownership, what are some of the terminologies behind it, okay? And at the same time, I find this a little bit an entertainment and fun to me. I look forward to Fridays and at the end of the week to go ahead and purchase some more tokens. So like I'll go to this property and and say, hey, you know what, let me go ahead and get 5 more tokens, okay, of this property. So thank you guys, thank you so much for being here. Again, if you're interested, scan these QR codes. I'd highly recommend just you join Navigate the Chain. Substack is free, and to sign up to the affiliate link right here. My name is Peter Simon Petroni. This is Step into the Future. I'm glad you guys have access to this information. I'm sorry I couldn't make this live to do Q&A with everyone. Remember, we're going to do a Q&A on YouTube Live. We'll do 2 sessions. So if you enjoyed this, just let us know. Share this with somebody new. I appreciate you. I love y'all. Have a great day.